What if the secret to building real wealth isn't timing the market, but simply owning great businesses and holding them forever? Today, we're exploring 6 top buy and hold forever stocks. Companies with strong competitive advantages, excellent financials, and the power to drive compound growth over decades. This is not about speculation. This is about long-term investing grounded in real businesses. Welcome to the Investment Diary. This isn't just theory, this is my diary. And today, I'm giving you the exact no-fluff buy and hold forever companies. First, why buy and hold? If you buy companies that solve real problems, have durable competitive advantages, and generate strong free cash flow for decades, the market's short-term mood swings don't matter. Set it, forget it, and let time multiply your returns. Let's dive into the 6 stocks. First up, Alphabet, ticker GOOGL. Alphabet owns Google Search, YouTube, Android, Chrome, and Google Cloud. Google Search alone dominates over 80% of the global market. This gives it an enormous economic moat through network effects and high switching costs. Alphabet is also aggressively investing in AI infrastructure, with billions allocated to its Gemini platform and DeepMind. Financially, Alphabet brought in over $90 billion in revenue in Q1 2025, with healthy operating margins around 34%. Google Cloud, once a loss maker, is now profitable and growing at 28% year over year. The company sits on over $90 billion in cash and virtually no debt. At under 20 times forward earnings, it's still reasonably valued. This is the backbone of the internet economy, and it's showing no signs of slowing down. Next, Microsoft, ticker MSFT. Microsoft has one of the widest moats in the tech world. It owns Windows, Office, Teams, Azure, LinkedIn, GitHub, and now AI copilots through its partnership with OpenAI. The combination of enterprise software and cloud infrastructure is incredibly sticky. Once a business adopts Microsoft tools, switching becomes very difficult. Microsoft's earnings have been growing in the mid-teens annually. Azure is still gaining market share, and their Office suite generates consistent subscription revenue. Their integration of generative AI into every product line gives them a major edge in the next wave of enterprise transformation. While the stock trades at a premium around 35 times earnings, it's backed by consistent performance, strong cash flow, and a massive R&D engine. This is one of the safest bets on the future of work, cloud computing, and artificial intelligence. Third, Amazon, ticker AMZN. Amazon is more than just an e-commerce giant. AWS, its cloud division, is a global leader with over 30% market share. While the e-commerce business operates on thin margins, it gives Amazon massive reach, logistics power, and customer data. AWS is the real profit driver, funding innovation across retail, devices, healthcare, and AI. In recent quarters, Amazon has returned to strong growth. AWS is profitable and expanding. They're automating warehouses, growing Amazon Prime, and expanding their advertising business. With over $2 trillion in market cap and still double-digit revenue growth, Amazon's scale and reinvestment model give it a long runway. It's a powerful business with 2 major growth engines. Fourth, Berkshire Hathaway, ticker BRK.B. This is Warren Buffett's company, but more than that, it's a portfolio of world-class businesses. Berkshire owns Geico, BNSF Railway, utility companies, manufacturing firms, and stakes in Apple, Coca-Cola, and American Express. It also holds over $320 billion in cash and equivalents, giving it a fortress balance sheet. Berkshire generates tens of billions in annual earnings and has compounded shareholder value for decades. It avoids short-term hype, prioritizes value and capital allocation, and doesn't pay dividends, so cash is reinvested efficiently. Think of it as a diversified holding company that mirrors Buffett's long-term mindset. For conservative investors, this is a foundational buy and hold stock. Next up, Visa, ticker V. Visa runs one of the largest global payment networks. Every time someone swipes or taps a Visa card, they collect a fee. In Q1 2025, Visa processed over $9.5 billion in net revenue with double-digit growth in cross-border volumes and digital payments. Its economic moat comes from network effects and brand trust. Merchants and banks are deeply integrated with Visa's rails. Switching is complex and costly. Plus, as more commerce shifts online and more countries digitize, Visa continues to benefit from secular tailwinds. Visa also buys back billions in stock and pays dividends, returning capital to shareholders while maintaining strong margins. As global spending grows, so does Visa. It's a low-volatility compounder for patient investors. And sixth, Mastercard, ticker MA. Similar to Visa, Mastercard dominates global payments. It's accepted in over 210 countries, and it's expanding beyond payments into value-added services like fraud protection, data analytics, and consulting. Mastercard's moat lies in its trusted network and high switching costs. It's hard for banks and retailers to move away from such an entrenched system. In Q1 2025, Mastercard posted over $7 billion in revenue, operating margins above 59%, and cross-border growth of 15%. About one-third of its revenue now comes from services, not just transactions, helping diversify and grow earnings. It's a consistent, high-margin machine with a long track record of innovation and shareholder returns. Now, let's talk strategy. These 6 companies span tech, cloud, consumer spending, industrials, and financial infrastructure. They're resilient, cash-generating businesses with durable moats. The buy and hold strategy isn't about guessing short-term stock prices, it's about buying quality, letting compounding do the heavy lifting, and ignoring the noise. Diversify. Don't overweight. Reinvest dividends. Check in once or twice a year, not every day. These are businesses you could pass down to the next generation. To recap, the 6 stocks you could buy and hold forever are Alphabet, Microsoft, Amazon, Berkshire Hathaway, Visa, and Mastercard. If you found value in this breakdown, hit that like button and subscribe to the Investment Diary for more long-term investing ideas. Tell me in the comments, which of these 6 stocks are you already holding and which are you watching closely? Thanks for being here. See you in the next diary entry.